So this is part two of the video. Once again, thank y'all for tuning in. I will be creating more breakdown content, if anything. I'm gonna just get straight into it because this is part one going to part two, and this video has gone on long enough, right? So obviously I'm gonna show the tier 2 certificate again. Status upgraded on this tier 2, same number, right? 100k tier 2, top tier plus, whatever. Same number, 582.11. So for this challenge, I only had to hit the 5% target, which was $5,000. This was passed within 3 days. So the rest are kind of buffer trades. So like I said, this will be really quick. I actually honestly could have just added this to the other video now that I'm really looking at it. That's okay, whatever. So this started during the weekend because I passed the last jade on Friday, and they gave me that account on that same Friday, which was the 25th of last week, Sunday. So this is Sunday. Buffer trade for Sunday, 0.01, 0.01 again. And just a reminder, if you just clicked on part two, just because what I mean by buffer trade is that in case I don't take a trade that day and I want it to count as an active trading day, I just take a buffer trade on it, whatever. So right here is where we actually started trading on the 27th. We have an entry at 29591 on US 30. 200 points, $2,200 on a 0.10. 29591. So this is from the previous video. This is too much. All right. 29591. 29591, 27th. 29591. I bet. So this trade was this was bread and butter too, right? So still on that overall bearish trend. We broke beneath this zone that is marked in green. So this is based off of the seller's exhaustion that we had seen at this level previously, and that bounce that you also had seen from here to here, establishing this big bullish trend here. So once price breaks below, I'm simple, straightforward market structure and price action trader. So after seeing that break below, we had two bearish candles, boom, boom, on a daily. We can break this down to the 4-hour time frame to see if we get a little bit more detail. So once price gets beneath that zone, I'm looking for a tap back into that zone and then a rejection to the sell side, showing me some sort of sellers are chilling back at this level of resistance that was once support. So the 4-hour is kind of jumbled up, right? It's too tight together. So let's cut it in half and see what we see on the 2-hour time frame. So this, we can see a bit more structure, right? We can see our lower lows and lower highs a bit clear. Let's go down to the hourly to see if we can break this down a bit cleaner, because that's too tight. And what I mean by tight, I mean price is too like close together, like tight, like this. This is tight. So we broke beneath this level, right? Then we're establishing our lower lows, lower high points all throughout this area. So after this kind of lower high was established, I consider this a minor level, a lower high, not a major lower high point. And what I mean by that is price didn't give me like a nice counter trend before it continued that impulse leg down. This is more of like a continuation type of move. So I'm gonna say there's a lower chance that price continues off of that, mainly because this is like a 23.6 continuation on our Fibonacci retracement. And with those moves, those can get kind of tricky, mainly because once it establishes that lower low point, there's a good chance we'll see a bounce and then that counter trend play its role to get steeper in the retracement for a stronger push to attract more sellers into the market, because most sellers aren't going to see structure, right? And try to sell right here, like this is a good price to sell, they like to see some sort of pullback, right? And then we sell off, right, at a better price level. So price comes up, retraces back to this minor lower high point, right, on our hourly time frame. And then I had seen this sort of rejection when I woke up in the morning. So I wake up around 6, right? So I trade mainly New York session, which is the hot session pretty much for U30. Price came up, rejected it on our hourly time frame, and then we have this nice bearish variation type of pattern here established. So after seeing that, I know there's a decent amount of sellers in this market, and we're probably within my risk to reward ratio of losing 100 points, right? And to add on to that, to add more confirmation, confluence beneath our 66 MA, and we have a nice rejection candle based off of that. So after seeing that, that's good enough on this analysis time frame for me to say I want to look for a short entry, because we have a higher time frame, right? We broke beneath this key level. We have a test on that key level. We have a bearish variation here. We have exhaustion, buyer's exhaustion on our 66 MA. So at that point, let's go to our 15-minute time frame. And then we see our minor structure once again, right? Rinse and repeat. It's the same strategy I've been doing. You know what I'm saying? So higher low point being established. Boom, boom. We have our parameters, right? This is our low. This is our lower high point. So I'm mainly looking for retracements back to these areas, so I have a higher probability chance of winning my trades. Once again, Forex is a game of probabilities. So this whole entire red box was that bearish variation we had seen. So after seeing that on the hourly time frame, I'm not hopping in immediately. I need to see some sort of nice pullback back to that area, so I can take a nice risk to reward ratio trade rather than entering on something based like this where there's no pullback and you see like some sort of continuation. That's not enough for me. Especially we're still trading above our 66 on our lower time frame, so we're still in like this minor uptrend type of pattern, this minor counter trend. So I liked this pullback that I had here, and then it formed this lower high point on the 15-minute time frame. That tells me sellers are still respecting this area, and price cannot push back past this high point over here. So we had that one rejection, boom, retracement, and then this bearish engulfing. Not this bearish engulfing, but this bearish type of candle. So this added to my confluence, right? This added to my confluence. This did not tell me to enter yet, mainly because we're still on this uptrend. So, but what I do have is I have one lower high point established, and then I have this second one even further beneath that key level. So after seeing this price tap back up, that was enough for me to say, all right, back, I'm good. I'm at a high point. It's within my 100 to 150 point range of stop loss that I like to use on U30, and we can probably see that continuation either back to this low and possibly continue this overall bearish trend. But like I said, it was a 23.6, so I wasn't looking for that grand push all too much. We took profit. I did not mean to click that, my bad. We took profit right around 19. We're on the first trade, right? So right here. And then I scaled into this order. Okay, now I'm starting to remember what. Okay, so yeah. So I was here. I entered here. We had this first rejection, this lower high point, boom. I entered based off of that, and then we had this counter trend level. Yeah, it's all coming back to me now. And once it broke down, came back up and retraced, I took my first entry here. Almost got tapped out here, but then price rejected again. And I was literally just looking for the bottom of this entire area to get hit. Because remember, it's a challenge. I only needed 5,000 to pass. But the funny part about this is I thought it was 8%, and then it was cut it in half on phase 2 to 4%. So I thought I only needed 4,000 to pass. So I scaled in once the price came back up and tapped this area based off of this lower high point, which is this second trade that you see here around 29,553. which was here. Yep. Oh, what just happened? Oh yeah, all right, my bad. After this bearish candle, again right around here. So after I seen that, I was like, I'm kind of trying to finish this challenge, like whatever. So I scaled in, based off of this next lower high point that had formed, and this was pretty much my target because this was that 4,000 range, right? This is 200 points on both trades. So it hit 4,000, and then I closed my trade. Then I checked the portal, which was this thing right here. I checked the portal and that day said 4,000 out of 5,000. I was like, oh shit! I would have held, because if it was my real account, I definitely would have just held that order to take the continuation. But since it was a challenge, I was just trying to pass. So that thing ended like that, and then I was like, shit! I need 1,000 more. What the fuck? I should have stayed in my order because I knew price was just gonna continue to drop from this level. So after that, I did not want to be greedy. But at the same time, I was like, man, I'm right here. Let me just like try to catch something quick. Cause I knew the overall trend on the day for most of the pairs that I trade. So I figured every pair was just going to continue to kind of sell off. So I went to GU, and obviously it's on a major bearish trend, right? Still established our range here. But this was on the 27th at 107.323. So 107.323. So and on the 27th, so right around here. Yep. Okay. So I seen this lower high point form when I popped my head over to this chart, and then I seen this next lower high point form. Mind you, this is not the best type of structure you want to take sells in, mainly because this higher low point kind of established itself here. But having noticed that, I was on I seen the hourly time frame, and then no, that this is after the shock that it was 4,000 out of 5,000. So I seen all of this buyer's exhaustion in this area. So that kind of made me just look at sells more, because we are on an overall bearish, even though we did establish this higher low point. I figured price will probably want to come down, bounce off of this level, and then probably continue that counter trend move. So all of the seller's exhaustion was good for me because I just needed something like short and sweet, right? Which was that $800 trade, which sold about 10 pips. 20 pips to hit that $1,000 mark to get back up there where I needed to be. And look how small this range was. Like GU was like moving. Like this small range was like just this range right here was 50 pips a pop, bouncing off of the square, right? So I'm on like my 15-minute, 5-minute, not panicking, but like I'm upset because I could have held my U30 entry and be finished with the trade. So I do like a quick analysis of this entire area just to try to knock it out. So higher low point here, boom. And then I seen this ascending type of correction popping up here. Mind you, this is after all of that seller's exhaustion we had seen on the hourly, and I had marked this off, this small ascending triangle, and then I just seen price getting lower, and lower. So after it broke out of this channel and then it continued like this bearish trend, the overall just target for this area, I would see it coming back down to this black line, which was more than enough room to hit my 20 pips, right? So on a 15-minute, I seen this break down, this first candle, then the second candle, boom, that bearish candle that broke out to the downside. Obviously, I'm a bit of ways back from this 66 MA where I could probably have a better sell opportunity, but we were kind of in like momentum. Like I seen the momentum started to kick in because we just crossed over our 66, and then price has been stuck here pretty much for the majority of the day, right? So after seeing the bears finally come in and see this bearish engulfing, my thought process was this is probably just going to continue to sell off back to this black line. So long story short, I took the sell, boom, hit target, took my 20 pips, rolled out. You know what I'm saying? Then we finished the challenge completely, and here we are. You know what I'm saying? But overall, it was a fun experience. That's like taking a prop firm challenge or whatever. My overall thoughts on Top Tier Trader. Their servers were responsive. They use Vital Markets. It was solid. Spreads were solid. I can't complain. My advice, honestly, would be to it depends on where you are at in your journey, right? So if you're just starting out, honestly, you should not be taking this challenge. You should honestly just look at this challenge as a test to see whether you can manage your risk properly and your strategy your strategy reflects your risk properly in the challenge, right? Because in a challenge, no matter which account you pick, 100K, 50K, 25K, whatever, 200K, you cannot lose more than 10% of the account, and you can't lose more than 5% daily. So if you're trading very aggressive, more than likely you're probably not gonna pass the challenge. It's a good chance to fail. You want to be patient as much as possible because you have 7 active trading days. And also, real quick, now that I'm really thinking about it, is on the second trade. In case y'all wondering, these are like 4 buffer trades to knock out the rest of the active trading days because I passed it with like 3 days or 2. But yeah, once that's established, I mean, thank y'all for watching the video. I mean, if you liked it, just hit the thumbs up button. I appreciate it. You don't even have to subscribe. Just hit the like button. I appreciate that. If anything. But I will see y'all on the next one. Maybe I'll do a chart breakdown for the week. Who knows? I'll catch y'all on the next one. Peace.